morning, everyone. Today's video will be a follow-up on a trade that we took last week and updating you all on the progress. And today is currently Sunday, and we will be going through maybe one or two pairs that is on my weekly watch list. So with that being said, let's jump right into it. So the pair that we took last week, it was USDCHF, and we were actually in profit. As you can see here, we were almost at TP1, take profit 1, which was our actual final overall target. We had some bias that price would struggle once we got to this area, which we actually were correct, but we were a little bit too correct. So price struggled just before we got to our final take profit. Once we hit this zero level, this previous at the time higher high, we ended up moving stop to break even, so we were at a risk-free trade. And later we let the trade progress, and we actually wanted to step away from our computer, and we actually ended up trailing our stop at the minus 38 level. And as you can tell, as the hours played out, price eventually began to collapse and eventually end up hitting our trail stop loss, leaving us with about maybe 30% or so of in profit. So technically, yes, we still take the trade as a win, but we did actually gave back about maybe more than half the trade, just because we didn't secure our profits at that 8,000 level, that 0.8000 level. So with that said, technically it's a profitable trade, but it's not an ideal trade that we like to maintain on a regular basis. So with that being said, moving on to the market movers for this week, I'm currently looking at a couple pairs. I'm actually looking at EURGBP, and I was already doing a thorough top-down analysis, and I do see an opportunity that we could have capitalized late last week. Granted, we've already took I believe 6 trades. Like I said, I really don't try to trade really beyond that, so I was pretty happy with the profits that I made last week and kind of just let this one get away from me. But we can also always still look for another entry if our bias still continues to be in a downtrend, and I can jump into the analysis in a bit. So basically, there was a opportunity here at this level right here. As we can see, price came up to this level, got exhausted, came back down, failed, came up, failed, came up, failed, came up, resisted on this trend line. We see candlestick analysis, we have gravestone, dojis, bearish engulfing. That would have been a nice entry, and we could have took the sell, but we missed it. So this is what we're gonna do. So basically, let me clear this up and kind of show you what I see. So the overall move, as if we were looking at this organically fresh, considering we missed the move, I would draw my fibs from this swing high to this swing low, giving me a bias that my hour take profits would be somewhere along the minus 27 and the minus 61.8. If we jump higher to the 4-hour time frame, as we draw our trend line, just confirming market structure, we were in an uptrend. As you can see, price then began to fail, and as you can see, price made a began to make a head and shoulders, and then we can see the neckline, and then price collapses, comes back, retest the neckline, and our bias is price is going to continue to run down to that minus 61.8. We also have another confluence here as well. If we jump up to the daily chart, we can look at the daily trend line, and this is going to be a strong bias under the confluence of some strong resistance respecting, and price may continue to drop, come down, bounce, respect this trend line, and continue. Why? Because if you look to the left, always look at historical data. We have price printing gradual higher highs, higher lows, higher highs, potential higher low, and to the future. So this is why I'm looking for sells, and I'm disregarding the 50 EMA, as because I know that I'm taking price essentially to that 50 EMA and expecting price to reject as a support. So let's jump down to the hour time frame. I'm going to keep this fib on here just for I understand where I'm at in the market, and I'm going to pull my fibs from here, this high, to this swing low. As we see, price has came down, this candle has closed, the market is about to open in a couple hours, and what I would like to see is price to come up and respect this trend line of some sort as a scale and entry, or it'd be a scale and entry if we've already entered in, but this is just entering on a missed opportunity. So keep that in mind. If you are away from your trading office, your trading desk, and you miss an opportunity, there are opportunities to always scale into the trade and capitalize on a move, even if you miss that very first move. So let's see here. So what has to happen for me in order for me to basically enter this trade this week? Price needs to basically make another ABCD move. Basically, it's completing the move within the retracement. And so as you guys are getting familiar with my fib trick, the minus 27 and the minus 61.8, I'm going to highlight this range here, and this is going to help me identify where price needs to go when completing the ABCD move. So let me jump down to the 15-minute for more clarity. Basically, price, this swing low, would need to print, come up here, maybe respect from the 50 EMA of some sort, come back down to the realm of that 38, 50, 61.8, ideally more confidence, and then bounce somewhere between this minus 27 with confluence to the trend line, more ideally to the minus 61.8. Show some type of rejection, candlestick analysis, price action, and this is where we would take our sell. So this, let me delete some of the stuff for you. So basically on the 15-minute on an entry, if we saw a bearish engulfing candle, we would, if this is a bearish engulfing candle, we would enter price here. If price is respecting the 61.8 and this is the completed zone, we may put stop loss just outside of that 78.6, which is about 6.7 pips, and we would move our targets to the original move, the original Fibonacci, and that would be, we could target all the way down here, giving us a incredible trade risk to reward ratio of a 1 to 8, almost a 1 to 9. With the market, I will probably be more conservative and just target this swing low, and within the new Fibonacci that we actually drew in this scenario, we would hit this take profit 1 based on the 15-minute, this take profit 2, which would be the final target within the 15-minute, and we would just hit the previous swing high of the original Fibonacci swing low. So as of right now, those are my current analysis for this week on a pair that I'm looking at. I do have a couple of more. I will send out a couple of videos, more than likely tomorrow, depending on how the market opens, and let you know if anything changes. But don't forget to like that button and subscribe. I appreciate all the viewers. Thank you. Bye.